It's about leverage, okay? Technical analysis, the Ichimoku cloud, institutional order flows, dark pools, a derivative of stocks. Volatility creates opportunity for a trader. Airbnb is in 192 of 196 countries. You're going to have a delta position. I figured out my stop loss. That's $1,000 that you wouldn't have seen before. I started to realize how big this market is.
Welcome to another edition of TradeStation's Trader Interview Series. My name is Michael Burke. I'm Vice President of Client Training here at TradeStation. And today we welcome Andrew Keene, veteran trader and educator. Andrew is the President and CEO of AlphaShark Trading. You can see Andrew quite often on CNBC, Fox News, Bloomberg, and of course Andrew hosts Morning Market Briefing and other events for us here at TradeStation. Andrew, thank you so much for joining us today.
Thanks for having me on, Michael.
So, Andrew, tell us a little bit about your background and how you got started in the markets.
So I graduated from University of Illinois Champaign-Urbana in 2001, and I had a finance degree and a concentration in accountancy, and I wasn't really sure what I wanted to do with myself after I graduated, to be honest. And growing up in the suburbs of Chicago, I remember going down to Chicago and seeing, these guys and girls in yellow jackets yelling and screaming at each other, like drinking alcohol during lunch, and I thought they were crazy. And I went to my trusted father because I respect him a lot about what I should do. I had interviews for investment banking, financial advisor, financial analyst. And as I continued to go through these interview processes, I noticed that I had a really good knack for basically game theory, probability, and math. Because in trading, there's statistics that say almost 90% of everybody that trades loses money. Usually you're on, I use Ichimoku Kinkin Hoi because trend is your friend. So, it's all about probability and math, and that's all that trading is. So, if you flip a coin 100 times, it's tails 70 times out of 100, it's still 50-50 on the next one. In stocks, it's not like that. There's a lot of technical analysis involved. So I got a job to trade at the Chicago Board Options Exchange. I took the 540 training every morning, got in a Union Station, and it was a 9-month to 1-year program. I was making $2,000 a month. I was living at home. And it just made sense to me. It's like I understood trading. I excelled in classes. There's 14 of us that went through the clerkship program, and only 4 of us got to trade.
The Chicago Board Options Exchange, or CBOE, is the largest U.S. options exchange in the U.S. Established in 1973, the CBOE was the first exchange to list standardized exchange-traded stock options.
Then from there, I was with Boda for about 3 years. I was backed by Ed Tilley, who's now the CEO of the CBOE, for a couple years. I stayed down on the floor as long as I possibly could. And what actually happened, which makes it the best time ever for a retail trader, I was a market maker for about 10 years at the Chicago Board Options Exchange. So what a market maker does is very similar to a currency exchange. In theory, I just want to buy the bid and sell the offer as many times as possible, and then I'll make money. Well, as the market started to tighten, options went from 5 to 10 cents wide. I remember, watching a lot of Lawrence McMillan DVDs of him. Markets were $1.50 wide, and now they're 1 penny wide. So what happened was there was a big shift in the industry, and market makers got driven out of that. Combine that with, electronic trading, and the marketplace wasn't what it was. So it now has become, and every single day becomes a better time for a retail trader to trade. Commissions are lower, and you can get in and out of positions very, very easily and liquid. So then I left the trading floor. I started my company as KeenOnTheMarket.com, a pun on my last name, and we rebranded to AlphaShark. Basically, our company is divided into subscriptions and products. We run 10 subscription-based models. The biggest one is people pay money to watch me and my team trade during the day. We run one of the biggest live audio and visual trading rooms in the world, and I trade equity options predominantly. And then I do a lot of webinars. I've done about 500 live webinars in the last 5 years. And we've taught probably over 50,000 students how to trade versus risk versus reward setups. And, I do have a lot of good partnerships, TradeStation being one of them. I'm on the morning briefing call this week. I've been happy and fortunate to realize that I'm good at trading and I'm good at educating and teaching.
So, Andrew, give us an idea of your trading philosophy and how you generate trade ideas.
I have a lot of different trading strategies. My big one for technical analysis is I use the Ichimoku cloud, otherwise known as Ichimoku Kinkin Hoi. So I'll talk about a couple of them. When we are on the trading floor, institutional order flow is what I watch. So I'm watching the biggest traders in the world trading the option market. We all know that there are dark pools, and dark pools were created actually to fight against the algos. So they're created actually in a positive instead of a negative. But there are, a lot of algorithmic trading programs. So sometimes you don't see the stock volume until after the day. So in the option market, we all know if a stock went from $10 to $20, a trader could get a better ROI, return on investment, if they bought options instead of stock. So options basically glorify your reward and also glorifies your losses as well if you take an option position. So they're kind of like it's a derivative of stock. So I watch institutional order flow in the option market, and options are only used for one of two reasons. They're either used as hedges or speculation. So when someone comes in and buys a bunch of calls are right but not obligation to buy a security at a certain date at a certain expiration. One of two things. They're either buying that for a hedge against a short stock position or warrant or grant, or they're doing that because they think there's some upside potential out there. So I watch this institutional order flow. I watch minimum of 1,000 options traded on an exchange, and then I watch for what I think is the best. These are known as unusual option activity. And this all started, and it's a strategy that I've been using when I was on the trading floor. When I was on the trading floor, we would have a Merrill Lynch broker. We never knew who initiated the trade, but they would come in and they would sell 10,000 put spreads in Apple almost once a week. And every time this institution sold us put spreads, it was a very ironic that Apple would always go up in price. And by about the third time they did it, I said, this guy probably knows something. And the OCC and the SEC doesn't have the manpower to go after every single person that knows something. But this guy or girl, represented by Merrill Lynch, continued to print money. And then I realized, hey, every time they sell put spreads, I should get long Apple because this trader seems like they know what they're doing. So I watch institutional order flow in the option market. It's called unusual option activity. It's very, very popular on CNBC. Pete and John Najarian, ex-traders from the CBOE, are big on it as well, and it's institutional order flow in the option market. That is the predominant factor of my trading. I also do trade earnings. I use a proprietary-based trading plan for trading earnings, and I did not trade anything for Google today, but I usually trade most of the big names. I'll trade the banks for earnings. And then the third one, which has been very, very popular and very, very good for me, called the triple confirmation system. And I looked for breakouts of the Ichimoku cloud to the upside or the downside, confirmed on multiple time frames. So the big ones I trade are Apple, Amazon, Baba, Netflix, Facebook, and Tesla. And those are all day trades. I usually take stock on the triple confirmation system. So Ichimoku King and Hoi, which is an easy, simple plugin on TradeStation, helps me. Trend is your friend. And those six, I like to trade them because A, they move a lot, and B, they're very trendy. So usually the trend usually works. If you're trying to day trade GE, that's very difficult because it doesn't remove that much. But when you're trading a stock like Tesla, when the average true range is about $11.50 a day, volatility creates opportunity for a trader. So those are the main three that I'd trade. Unusual option activity, earnings, and then day trading stocks using my proprietary-based triple confirmation system.
So Andrew, as a segue to that then, can you talk a little bit about how you approach trade management or position management, setting profit targets or exit levels, and maybe touch on trade size and account level risk as well?
Yeah, that's a very good question. I think that's probably the biggest difficulty with most traders. When I was trading on the floor, when an institution would go sell a bunch of calls to us, and let's say they sold us calls for $5, as a market maker, you learn to hedge yourself with stock. So if you buy calls, that's bullish. So you're going to have a delta position, and then you're going to hedge yourself delta neutral with stock by selling stock. And I used to have a trader next to me that if we bought calls for $5, that trader would try to immediately sell them for $5.10. And I tried to explain to him that wasn't very good because he's risking $5 to make 10 cents. And that's not a very good reward to risk setups. So when I'm looking at trading, the most important thing, and good traders think about how much money they can possibly make. Great traders, think about, if I am wrong, how much money could I possibly lose? And as a trader, you can do this in one of two ways. You can either do it as a dollar amount. Like today in Facebook, I had a trade in Facebook. I bought 300 shares. I figured out my stop loss. My stop loss was going to be $1 wide. I said I was willing to risk $300 on that trade. I ended up making about $236 on that trade. So I can do it as a dollar amount, or I can do it a percentage of my total book. So we can just go through my 3 trades that I've kind of talked about. The first one is unusual option activity. In unusual option activity, I personally do not have stops. I call them swing trades and then longer term swing trades.
Someone once said that a swing trade is a day trade gone wrong. Swing trades typically last from a few days to a few weeks.
So whatever the first expiration would be a swing trade. So currently, it's July 24th. August would be a swing trade. And I'll take these a little bit lighter because if I'm buying out of the money calls or out of the money puts, they're going to have very prevalent time decay. Then I have longer term swing trades, which are usually 8 weeks and longer. And actually, these positions, I will add to them if they are down money because I still believe the activity is really strong. So if I bought an option for $1, I wouldn't mind adding more at 65 and more at 35 if it's more than 2 weeks to go till expiration. In terms of the exit strategies, I started tweaking my strategy. So I start looking at the ATR, which is a very simple and easy plugin on TradeStation where you can just look at the average true range. And then I'll take that and I times that by the delta. So let me just give you a perfect example here. Let's say I bought a call for $1 and I looked up and the ATR of that stock is $1 and the delta is 30. Then I would set my first profit target if I bought it for $1 at $1.30 and then $1.60, $1.90 and then $2.20. And that's how I like to trade unusual option activity. If we looked at the next one, which was earnings. Earnings, I like to do a lot of spreads. I get tons of emails of people saying, hey, I bought calls, stock's up, and my call value is down. This is a scam. And it's not a scam. It's just volatility is getting crushed after the earnings announcement. So when I trade earnings, I like to do a lot of call and put butterflies based on the measured move target. I will do call and put spreads as well. And then the last one is the Ichimoku cloud. So when I'm day trading, if I find a setup on the triple confirmation system that's available on TradeStation, the first thing I say is how much is my stop loss, okay? As good as I think every trade I make is, there's going to be losing trades. So figuring out, today in Facebook, I said I was going to risk $300. I put $1 stop in, so I did 300 shares. If I wanted to risk $300 and my stop loss was going to be $1.50, I would have only done 200 shares. So it all depends on where my stop losses are. When I'm day trading, the 6 big names, I would say every day trades $300 to $600 of risk. Every earnings trades about $500. And then usual option activity, I can take up to maybe $10,000 or $20,000 of risk depending on how big the order is and how much I like it. So that's kind of a little basis of how I use it. If you're a beginner trader and you're trading unusual option activity, we always say maybe a 30% stop loss, if not a 50% stop loss. Like I said, I'm a full-time trader. I've been trading for 14 years, so I don't use stop losses, but standard beginner trader, 30% stop loss, and an intermediate trader, I would say about a 50% stop loss.
That's great advice. So Andrew, I understand you're writing a book. It's not necessarily stock market related, but why don't you talk about that a little bit?
As a smart investor and as someone who's very successful on the trading floor, I've made over $4 million trading equity options. A lot of that was in 2007, 2008. I'm sitting on a lot of cash. And me personally, I don't want to be buying the stock market up here. I think it's inflated. I think that, it's going to come down at some point. A while ago when they thought Trump was going to have a 50% chance of either leaving office or being impeached, the market rolled over. So as a smart investor, I always look for opportunities where I can put capital to work and get a good ROI, return on investment. So when I moved from Chicago to San Diego, I left San Diego and then I moved to Texas after that. And I had a friend of mine, he said, you should buy a house. You can Airbnb it out. I will take care of all the management for you. And then you'll have a place to stay for free. So I looked at the ROI on that, and we all know that the 10-year interest rate is trading about 2.2 to 2.5%, and it's probably not going to move for a very long time. So if I have money sitting there and 2.2% is really not going to do anything, it's actually a negative rate after inflation, where can I put this capital to work? So I've been starting to accumulate Airbnb properties, and I started to realize how big this market is. Uber is the #1 privately held company with the highest market capitalization, but they're actually not profitable. Airbnb is the highest profitable market capitalization company in the world, and they're expecting an IPO probably, I would say, fall 2018. So when I came in and, knowing real estate and learning real estate, it's about leverage, okay? So if you buy, a house for $500,000, you only need to put up $100,000 to get that equity of a 500,000. So I started looking at this model and I said, hey, this is great. We all know back in the day, you used to be able to buy a house, put 30 or 40,000 into it and flip it really easy. Flipping houses was very easy. Everybody got into that. But there's opportunities out there anywhere in the United States and in the world. Airbnb is in 192 of 196 countries, the biggest country being the United States, the second biggest country being Australia. So I basically decided to write a book on the Airbnb business model. It's broken up into 3 sections and chapters. One of them is for hosting. One of them is for, as a consumer, why I personally use Airbnb instead of hotels. And then the third section is on investment opportunities. So every single person in the United States, if they go out of town on vacation and they feel comfortable renting out their house, can make money renting out their house. I mean, it's an unbelievable phenomenon. My parents live in Deerfield, Illinois, which is a suburb of Chicago. There's probably 60 to 70 Airbnb listings on there. So, if you think about it, some people don't want to rent out their house. They feel uncomfortable with strangers sleeping there. Even though Airbnb has $1 million insurance policy, it's not covered on jewelry, cash, or like paintings. But, if you go out of town, let's say you go on vacation for a week, and you could potentially just be renting your place out, depending on where you live, how big it is, $150 a night. If you're gone for 7 days, that's $1,000 that you wouldn't have seen before. So as a host, there's 3 basically ways you can rent it out. You can rent out the entire place, you can do a shared occupancy, or you can rent out basically like a couch or like part of an apartment or house. So people don't realize how great this business model is. And when Airbnb IPOs, I think there's going to be a big rotation into Airbnb and out of hotels. Because as a consumer, I travel a lot with my friends. Well, we don't want to get 2 hotel rooms because that's expensive. But we don't want to be in the same room with beds next to each other. Airbnb business model is great because I can get a 2-bedroom condo with internet. If you're a family, you can get a kitchen. Think about a married couple with 2 kids. They're not going to get 1 room, but they're probably not going to get 2 rooms because they don't want to put the kids in. So you get an apartment. My place in San Diego, and we're about 85% occupancy. And there's always times, like we just had Comic-Con over the weekend, and the place rented for $1,000 a night, and it's a 650 square foot apartment. So basically, the Airbnb business model has the best return on investment of any investment I've seen out there in a long time for as secure it as is. So I currently own a place in San Diego. I have another place in Arizona, and I have a place in Chicago, and I'm trying to accumulate a lot of real estate through this Airbnb business model and exploiting this basically arbitrage situation of purchasing places and taking advantage of this new phenomenon in their business model.
That is fascinating. I never really thought of it as an investment opportunity like that, but that's very compelling.
It's unbelievable. Like my place in San Diego, I'll make about 18% return on investment on how much I'm going to make minus how much capital I had to put up front. And that doesn't take into consideration appreciation. And like San Diego, it's appreciated 8, 11, and 13%. Say it does 5% appreciation, that's another 25% on my bottom line that I'm going to make.
That's amazing. When is the book going to be finished?
So I have an agent in New York, and they're basically, you send a proposal to a bunch of the publishing companies that they know.
Sure.
The book is done, but once you land the deal, it probably will not be on shelves for 6 to 9 months.
Sure, of course. We're just about out of time, but I'm wondering if you could take a few minutes to talk about AlphaShark and what that looks like throughout the trading day and any other upcoming projects you'd like to talk about.
So I'm on West Coast time. I'm in San Diego. So my day basically consists of I wake up at 6 o'clock. I used to read a lot of news and stories about everything, and I was like kind of a news junkie. And I had a big position on GE. I remember over the weekend I was really massively short General Electric, and Yahoo Finance had a story that said GE got some $10 billion deal for a bunch of engines in China. And I basically sweated it over the weekend because we all know stocks are not open on the weekend. And all weekend I was just thinking about if it goes up 40 cents, how much I can lose. If it goes up $1, how much I can lose. And like all weekend I was just so nervous. And then when I came in and it opened, the stock was up 8 cents. So after that day, I said to myself, I'm never going to read news and articles about that again, because you'll find 50% that are bullish and 50% is bearish. So I don't spend a lot of time on actual news during the day. So kind of see what's going on pre-market. I see if there's any upgrades or downgrades, earnings that come out. And then I try to just plug in, and then I run the trading room. So the trading room is open from 8 a.m. Central Standard Time to 3 p.m. Central Standard Time. During those 7 hours, we will have 5 moderators on and full day audio and visual. Every single one of our moderators has a different trading style and it trades different products. So, I have one trader that he only trades futures and he only day trades. He'll trade for about 3 hours. He wants to leave. He doesn't want to have any positions on overnight. I have another trader that really likes to trade earnings. I have another trader that likes to trade stock. So in the live trading room, guys, this is a pop-up window where you can watch me and my moderators trade for 7 hours of audio and visual every single day. So I get on at 8:30 Central Standard Time. I go for an hour and 15 minutes total. In that time, I'll be trading unusual option activity, managing my positions, day trading those 6 main stocks, which is Apple, Amazon, Baba, Facebook, Netflix, and Tesla. And then a lot of times right after that, I go to the gym because working out for me is very important, and it releases serotonin and dopamine levels to the brain, which helps me focus better on my business and on my trading. Then I usually come back, I watch the markets trade. I do a lot of webinars. I probably do 2 to 3 webinars a week. I answer emails from a lot of subscribers, and then I focus a lot on running the business as well. So my day, every single day is different. I have about 10 people that work for me, a lot of different moving parts, trying to come up with ideas for indicators, webinar topics, trying to do education. The one thing I kind of pride myself on is the fact that I am a full-time trader. I've been trading basically every day for 14 years. We're now at the end of July, and I think this year I've not traded 2 days total. So I am a full-time trader. In my email, I'm very loyal to my subscriber base and my customer base. Anybody that emails me any question about trading, anything about technical analysis, anything about charting, anything they want to learn, I will 100% email them back within 24 hours. And I kind of pride myself that, I'm actually in this to give people education. When I was younger, Boda Capital Management took a risk on me. I was a young kid. I didn't know what I was doing. They invested their time, energy into me, and it worked out for both of us because I made money for them. I made money for myself. And I feel like I need to pay it forward. I've traded every single market besides maybe the Treasury yield curve. I've traded stocks. I've traded Forex. I've traded futures. I've day traded options. I've swing trade options. So I'm pretty knowledgeable in the subject. I've read, obviously, a lot of books besides my own on trading. So I focus a lot on making sure my customers, and even if they're not customers of mine yet, I want to prove to them that, I do care, and I want, everybody's profitability obviously to be higher. If you have any questions about stop losses, if you have any questions about technical analysis, if you have any questions about unusual option activity, earnings, futures, Forex, you can email me personally at andrew@alphashark.com.
Well, thank you, Andrew. I really appreciate you taking the time to be with us today.
Thank you.
And thank you for everyone listening. Be sure to tune in and subscribe to more of our TradeStation podcasts. And don't forget to visit our website at TradeStation.com to learn more about our outstanding educational resources and online brokerage services. The preceding podcast was for educational purposes only. All of the symbols and trading ideas discussed by the instructors and guests were for educational purposes and not recommendations. Active trading is not suitable for everyone. Options trading carries a high degree of risk. You can find the characteristic and risks of standardized options disclosure and additional disclosures on the TradeStation website.